You can't take it with you when you're gone, so how do you make the most of it while you are here? It's time for Your Money Matters with Sam and Dieter from Harness Financial.
We got Sam with us this morning. You got a guest. I'll hand it over to you.
Yes, we do. We've got Richard Christensen from Capital Advice. You're a mortgage advisor, is that right?
That's correct, Sam. And thanks for having me on this morning, guys.
It's a pleasure. I was just reflecting, Sean, 17 years ago, I was 17, just out of Wellington College, my first job out of college at Westpac Lambton Quay. And I met a guy called Richard Christensen at Westpac Lambton Quay, and he was a relationship manager there, and he gave me my first credit card. So thanks, mate. I went out that day and bought a guitar, and I've still got that guitar, still paying it off.
Yeah, but been in debt ever since.
Hey, it's great to have you here during such a pertinent time when it comes to mortgages. Your background is in private banking, and now you're a mortgage broker and an advisor. Can you tell us a little bit more about what the difference is between a private banker and a mortgage broker, and your background in general?
Yeah, sure. So I kicked off in 1984 in the bank in a branch in Christchurch, and I quickly found that I really enjoyed working as part of a team, and I also enjoyed the fact that coming into the bank, you could move into, there are a lot of different roles in the branch that you could move around in a short period of time. And so you're gaining new skills the whole time. And as well as that, and a big part of it for me is that the bank was really social. Like, it was a great place. There were lots of parties, and it was a fantastic time. So that was really cool. So I spent about 3 years doing that, and then I got an opportunity to move to Wellington, and I moved into a role in Wellington where I was basically moving around the country, training staff in all the different branches how to use a new computer system that the bank had introduced. And that was gold for me, because I was able to, like, say, for example, I was working in Hamilton for a few weeks. I was able to stay in Hamilton during the weekend and head out to Raglan and do some surfing on the weekend. So for a young single guy, it was a really cool lifestyle. Following that, I moved back to Wellington. I kind of settled down, got married, had a couple of kids, did quite a few different roles within the bank, mainly in the branch network, but then moved into relationship management.
Yeah.
So, and by that I mean managing a portfolio of clients, and that kind of morphed over time into a private banking role.
So what is the difference between private banking and mortgage brokering or mortgage advising?
Well, there's not a lot of difference, to be honest, because in private banking, you're looking after a portfolio of high income earners and or high net worth people. And you're basically looking after all of their banking requirements. With a mortgage advisor, you're typically helping a client with a specific transaction, but the similarity between the two is that you're focused on what the client's goal is.
Right.
So the transaction might be help the clients to purchase a property, but at the same time you're looking at, okay, well, how does that help that client create wealth in the long term?
Right. Yeah. Do you think, Richard, that now is a good time to buy a house?
This is my personal opinion, but I think now's a great time to buy a house, and for a couple of reasons. You know, over the last probably 2 to 3 years, we've seen property prices in Wellington come down quite markedly.
Yep.
You know, if I look at my property as an example, and you know, you can track the value of your property quite easily these days through homes.co and NZ.
Yeah.
You know, I look at my place, it's come down about 20% in value. So, you know, there are definitely opportunities out there for first home buyers. Coupled in with that is obviously the fact that last week the Reserve Bank reduce the official cash rate. And as a result of that, we have started to see interest rates start to come down. My personal feeling is that, this is just the beginning. And the Reserve Bank has signalled that to a certain extent as well. So, I think we will probably see further interest rate reductions this year, at least one more.
Yeah.
And then a continuation of that through into next year. Some of the reduction in the official cash rate hasn't flowed through to bank lending rates yet.
Yes.
But, I think that will happen over time. I think it's inevitable.
I heard a segment yesterday, I think replayed from News Talk ZB, where Nicola Willis was saying that mortgage brokers don't always disclose how many banks they work with. And I was shocked that she would say that, because the regulatory environment prevents that from being the case, right? So what as a mortgage advisor, what do you have to do?
Oh, look, we're governed by regulation, and usually the first interaction we have with a client, we will send them a copy of our disclosure document.
Yeah.
And that outlines, amongst other things, which banks we are authorised to deal with.
Yeah.
And so for me, across the board, I can deal with all of the banks.
Sure.
And a lot of second tier and third tier lenders as well. The other thing the disclosure document outlines is how we're paid.
Sure.
And I think there may be a little bit of a perception out there that sometimes you need to pay to use a mortgage broker, and it would only be in very rare circumstances that you would pay a fee to use a mortgage broker.
Right.
Most of the time, 95% of the time, we're paid by the banks.
Yeah, domestic lending mortgage brokers get paid commission, eh?
Yeah.
Sometimes there's specialist requirements, but not very often.
Yeah.
Can I jump in here? I want to ask a question because it's pertinent to today. How easy is it to change banks or change the bank you've got your mortgage with?
Yeah. That's actually a really good question, because in a way banks want to deter people from moving, right?
Yeah.
So it's in their interest to make it hard. But the short answer to that, Sean, is that over the last probably 4 or 5 years, banks have made it a lot easier to move. Okay, and so there is still a little bit of a hassle factor. So if I see a client and they come to me and they say, I want you to assess the opportunities for me out there in terms of moving banks, one of the things that I do take into account with them is the hassle factor. Typically, the biggest pain is around moving your automatic payments, direct debits, that sort of thing, across to another bank. The other side of things, if you've got a mortgage, there is some conveyancing that a solicitor will need to do. There's a cost involved in that, obviously.
Yeah, that's true.
But the process is far easier than it used to be in the past.
And I'd also make the observation that getting variance with your existing bank in your mortgage is way easier, even the last 10, 15 years as online banking's come on and the technology, to say, I want to, and I think I've got my mortgage split in half of it's on quite a long fixed, half it's sort of floating around, so I'm sort of hedging my bets.
Yeah.
And that's easy to do and easy to change online, way easier than it was, I would say, even 4 years ago.
Yeah, agree.
And there's more products too, isn't there?
Yeah, there's more products. The products that the banks offer across the board are reasonably similar, right? There's not a lot of difference between those products, and in fact, I don't think there's a lot of difference between the banks as a whole either. I think they pretty much all offer a similar product and a similar service. There is a little bit of variation in terms of the service levels that we get from the banks that we deal with. So, for example, one of the banks we deal with when we submit an application, has a turnaround time of under a week, which is fantastic. That's the sort of thing that we want to be seeing from banks. Most of the banks have turnaround times of sort of 7 to 8 days.
Right.
Again, that's pretty acceptable, I think.
You were saying one bank has a 3-week turnaround at this moment of day.
One bank has a slightly longer turnaround than that.
You told me a story earlier this morning about some clients that you recently met with. Do you want to share that story, because it cracked me up? Yeah.
Yeah, so look, I got referred some clients, and I sat down with them for an initial discussion, and they said to me their plan was to buy a house in about 12 months' time. And they're very disciplined in their approach. They had a really good savings plan in place, and so they wanted to save a specific level of money before they got into the housing market. And they phoned me a couple of weeks ago, and they said, hey, we were just out for a drive in the weekend, and we came across an open home, and we went in and had a look, and we want to make an offer on the property. Yeah. So, and that's really consistent with what we see out there a lot of the time.
Because you actually deal with human beings, eh?
We do.
Yeah.
and they change their mind from time to time as well. So, and that's fine. I had already done some background work for these people, and so they had an understanding of what their debt servicing capacity was. So they saw this house and they were like, okay, we've spoken to Richard. We kind of know how much we can borrow.
Yeah.
Although we didn't have a formal approval in place.
Yeah.
And they wanted to take it to the next step.
So let me guess, you didn't recommend the bank that has the 3-week turnaround time?
Correct.
Yeah. Hey, we've got a question here from a listener. Can you guys explain equity share mortgages?
Equity share mortgages.
And you may not be able to.
It depends on what they mean. Are they talking about buying a house with someone else? Are they talking about...
Okay. Gary, you'll need to redefine by text or ring in, mate, on 0800 332
Well, I think he might be talking about how grandma or mum and dad help their kids get in with equity.
Right,
Do you want to talk about what that is?
Yeah, for sure. And that's really common these days for mum and dad to look to help son or daughter get into a property.
Yeah.
By using an existing property as collateral.
Yeah. Or by giving them some cash.
Yeah.
More often, actually, by giving them some cash.
But what if there is no cash available?
If there is no cash available, then we need to do a little bit of an assessment on mum and dad's financial situation as well.
Right.
Yeah.
But it can be done.
It can be done, absolutely. But look, banks are really comfortable. Banks want to lend money, right? They want to help people get into properties. And so they're happy for, situations to arise where they're going to lend Johnny, 20 grand to get into a house. Sorry, not lend. They're going to gift.
Yeah.
Because effectively, from the bank's point of view, it has to be a gift.
A gift, yeah.
Unless Johnny can
Because otherwise your liabilities increase.
Yeah, absolutely.
Okay, I get
Absolutely.
it.
Yeah. And the banks do put some criteria around that, in that they get mum and dad to sign a deed of acknowledgement of debt, which just outlines the fact that mum and dad aren't going to take a charge over the property.
Yeah.
There's no interest payable on it,
Yeah.
That sort of thing. So, so it gives the bank a bit of comfort.
Yeah. Here's a question. Does a solicitor, Jamie asked, need to be involved if you're just renewing your mortgage or changing it, but may want to explore options with other... if you're renewing your mortgage and you just want to have a look, do you need to get a solicitor involved?
No, the short answer to that is no. If there's not going to be... It would only be where you were changing banks that there is some conveyancing involved.
Why is there conveyancing? You still own the property. It's just the lien for the house's collateral. The bank should bloody pay for that if they want the collateral.
Well, in a way they do.
Okay.
In a way they do, Sean. So banks, you might have heard banks of a cash contribution. So banks incentivise people to take out loans with them, right?
Yeah.
So as an example, if you came and you wanted to purchase a property, you needed a loan for 500 grand. the bank's going to give you $4,500 to incentivise you to take that loan out with them.
Right. Okay. I get you.
Those cash contribution amounts are pretty consistent across the banks.
Yeah.
But the bank will then make you sign a cash contribution form which says you're locked in with them for 3 years.
Yeah.
Or 4 years for some banks. If you want to leave, if you want to refinance within that period of time, that money gets clawed back.
All right. Matt's joining us now. He's got a question for you guys, I think for Richard or Sam.
Hi, Matt.
Hi, Matt.
Morning, Mr. Plunket. Hey, guys. Just a question for you. If you've got a mortgage that's currently locked in on, which I have a 5-year rate, at say, less than 3%, and you want to pay the mortgage off because you've come into some money, are the banks legally, are they allowed to charge you a break fee or not, considering that the current mortgage rate is way higher than what you borrowed at?
The short answer is there should be no break fee on that. The bank will be really happy, actually, that you're going to pay that back because they've got that debt locked in at 3%. Their current lending rates are closer to 6%. So they're going to be pretty happy when you turn up and say, hey, I want to pay that back.
The question is it
are
really
they allowed to charge you, though? Because they're saying they will.
I can't see why they would want to charge you a break fee for that. Sorry.
But in this case, you probably want to have personal advice, and also just make sure that it is completely in your best interest to pay it off. Does paying it off work in with your entire financial plan as well? Are you sure?
Well, at the moment, I'm better to just put in a deposit and get the 5% interest and pay them the 3%.
Yes, or get advice with someone like Dieter around other investment options too that pay a lot more than 5% potentially.
Hey, thanks, guys.
Look, I just want to... thanks, Matt. Good talking to you, and I won't charge. Look, we're getting a whole lot of stuff now. Guys, we're down to the last 200 grand of our mortgage. It seems to be slow paying it off. Should advise on speeding up getting free. Oh, look, no, that's probably too complex without more information. If the bank pays the brokers an upfront fee and sometimes gets a trail commission, if we went direct to a bank and don't use a broker, will we get a lower interest rate?
No.
Okay. So okay.
What proportion of mortgages are written by mortgage brokers in New Zealand right now?
That's a good question, Sam. So, based on the most recent data that I've seen, it's between 40 and 50%.
Right.
However,
That's huge, eh?
New Zealand typically follows international trends as far as that goes, and in the United States at the moment, that's about 80%.
Wow.
Okay, Australia's about 60. So, the likelihood is that we expect more and more people over time will want to use our services.
Yeah. Look, I've got tons of text there, but I think you've hit an area, right? Okay, and people are thinking about their mortgage. And I just say, I checked mine last week when the OCR came in. Did I make the thing? Well, it's kind of marginal. I probably could have been smarter or more bold or something, but there you are. If people want to get in touch, if they want Richard's services, do they get to Richard through you? Do they get to Richard direct? How does this work?
We at Harness Financial will 100% refer straight through to Richard, especially following this segment because he's a really good guy and
Thank you.
And he's done awesome work for our clients. www.harnessfinancial.co.nz and Richard, what's your website?
Capitaladvice.co.nz.
All right.
Cool. All right. Now, guys, and also, look, would you be peeved off? There are some questions here, and I said, without detail, I don't think you can answer them in this. Do you mind if someone just rings up and asks you a question?
Oh, no, that's completely fine.
Cool.
Yep.
There you go, folks. Free advice, and you don't have to ask someone like me who doesn't know. Fundamentally. That's it for another week with
Your Money Matters with Sam and Dieter from Harness Financial. To make the most out of your money, visit harnessfinancial.co.nz.